Morning traders, Paul here with GammaEdge. Today is June 27th, Monday. Let's get started. Please pause your reader here, read this, internalize it, agree to it, and when you get done, hit the play button. Overall, the market model signaled a potential new medium-term short entry here on Friday. This is the ARCX, which is the NYSE, NASDAQ, and American exchanges. Important in that when we see this, it's a signal that we want to pay attention to. Has the potential to be a medium to longer term breakout, and we want to go long when we see something like this. So pay attention to this. Certainly could see some weakness this week, but nevertheless the signal's here and we should be looking at it. Index conditions are mixed. We did have net positive gamma dropping, net negative gamma increasing in the SPX, but we have a kind of a flip situation here. We had a drop here in negative gamma and as well as a drop in positive gamma on the SPY. And when we see that type of situation, we're at influx, and we're just going to have to watch this carefully. Now, I will note, excuse me, the zeros here have gone up. When we see the zeros go up and we see the highest call gamma go up, that's usually a very constructive thing. So we are seeing that in the SPX. But over here in the SPY, we're actually seeing puts come up closer to spot price, and we're seeing calls advance. So it's, again, a mixed picture. We want to pay attention to these things. Just keep track of what's going on here. Over on the Qs, kind of a mixed picture, as I was saying, and then IWM is relatively unchanged in the comparison. When we take a look at volatility, we're actually seeing a drop in downside put buying. We're also seeing a drop in upside call buying. When we see that type of mixed scenario, we could be at a turning point, something to pay attention to. This dominant strike here at 28 used to be up here at 35. It's actually dropped down. This is the expiry for last trading day. Will be tomorrow. It'll be expiring off Wednesday. And so I think it's important just to realize where we are in relation to that. Now, we don't believe that the VIX trades gamma, quote unquote, like the other stocks and indices, but it is something to watch, and we like to use our same tools so we can get a visualization. You can see we're pretty much range bound between the 35 strike here and the 27, 28 level that we're seeing right now. Taking a look at the near-term expiries, I've highlighted the key levels that I want everyone to pay attention to. The black dot indicates key levels that if we go above into the close, we could see some monetization. These are all coming off today. The SPY, the Qs, and the IWM are equity settled, whereas the SPX is cash settled. You can see net positive on the expiry across the board. You can also see that here by the green wing being just dominating over the red wing, which is the net negative gamma. When we see something like this, we're looking for a monetization. A lot of folks will want to capture these gains if we push north, and that capturing of those gains could have a dealer reaction of actually selling the underlying and could drive prices down. So just be aware of that today. Taking a look at the index options, a couple things strike me. So we're actually seeing puts going into the complex. You can see the magnitude difference on the SPX between the calls on the left here and the puts on the right here. And we think that's fairly significant. Also over here, we're seeing a lot more shorter term puts being added. And then out here into the July expiry, seeing a fairly significant amount of puts being added. And this is on the SPY. You can see the distribution of those calls as well as puts. Obviously, anything down in this area is most likely being sold as perhaps to pay for some upside. Just be aware of that when we take a look. I don't think anybody's banking that the SPX is going to go down to 3,000. I think this is probably a lot of hedging that's going on to pay for upside. When we take a look at the Qs, note in the short term a lot of call gamma calls going in, which is going to introduce call gamma. Not so much on the put side, so that's again something of significance. I've also highlighted over here on IWM, although IWM has been broken pretty much for some time now. You can see that we're getting some September puts going in, but we also have things going in on the call side for the end of July. So something to pay attention to. Again, the structures are as you can see here. Taking a look at the SPX into today, The two red dots indicate that we've had some levels coming down. When we see gamma coming down, which is the TGZ, typically that's short-term puts being added to the complex. When we see the deltas going up or down, in this case the green indicates that levels are going up, we're seeing perhaps a little bit of longer-term puts being closed, calls being opened, shifting the balance. And so we're at this transition area. You can see where we closed here. We've got the JPMs sitting in here. Note that not shown up here, the 4285s are long puts, are deep in the money. And down here at this 3620, 44,000 contracts was the original offer. It's now somewhere down around 42,000. They've actually had some adjustments go on. When we see something like that, I don't think we're going to be going down here, but we'll have to watch that for this week. These do get rolled this Friday, or excuse me, Thursday, 6:30. Taking a look at the 0 DTE, note we have a positive expiry. I want to call out this dominance here at the 4,000 strike. Again, this is the expiry. Doubtful we're going to push much higher than the 3960, but if we do push and break 3960, I don't think we can make it above 4,000. And the reason is the SPX structure, and you'll see that in a second. We are in a transition just above that, so I'd like to see this whole area defined by the rectangle here to hold. Note the negative or the positive deltas here, negative gamma setting in at the bottom of the transition zone. So I do think it's very, very possible we do have support here. If we do push higher today, it's possible that this 3960 and into the close could see us propel upwards. I do not think we're going to go any higher than 4,000 due to the expiry here. When we take a look at the combo, and the combo is the AM plus PM on the SPX, important to note it's a really broken structure. You've got some positive deltas here, interlaced with negative deltas, fairly strong magnitude on the negatives. We've not cleared this yet. And when we see deltas that are very, very negative, those are longer term puts that are in place. In fact, here at 4,000, you can see we've got quite a bit of put open interest, POI is what we call it, as well as call open interest here. And because it's dominant here on the put side, we've got this dominance here that you can see, and this is a very large number to overcome. We need these to come off before we can actually advance. Now, to the downside, circle 4. It is possible we could break through, and if we do break through, I do see a kind of a rapid movement down to 3,800. I don't think we're going to get much below 3,800, but we'll just have to wait and see here. I'd like to see 39 hold for the reasons that we just talked about on the 0 DTE, and so we'll be playing this accordingly. I do think a push upwards, I think we're going to be limited in our ability to go over 4,000 for the reasons I said in the 0 TTE as well as here. Taking a look at the overall structure, it's a poor structure for advancing. What we're seeing is we're sitting right here. We've got a lot of puts in place down here offering downside protection. As price drops, people monetize and it'll push us up. Very loose all the way up. You can see a lot of negative gamma being exposed here. We've got a lot of areas to transition through. I don't think it's going to happen in the short term. So we need to really push fairly aggressively. We need to see a lot of call buying. And frankly, I don't think we're going to see it. Not today. So what's the summary for today? Market model has triggered a new long entry. I want everyone to be aware of that. It's a mid-length entry signal. It is prone to failure, so just be aware of that. So don't get out over your skis. Make sure you've got good, proper risk management. The structure is poor for an advancement. I think 4,000 is the level. Read the market model here. It's inverted, downward slopes. Short-term, new entry signal. Take it. Do small. Paper trade, of course. Index wing charts are mixed. I think they're weak. The multi-day upside target, I don't think we're going to get any higher than 4,000 in the short term. We need to see 3,900 hold. If we don't, I think we go down to 38. Remember, we have the hedge roll on 630. It could be significant. Excuse me. So that's it for today. I think if you like today's content, please come join us at GammaEdge.us. That'll take you to a Discord sign-up page. From that sign-up page, you get a 14-day free trial. All the tools turned on. A lot of great traders in the Discord. We're very, very active in voice. lot to learn there. Learn how to apply this to your trading. Follow us on Twitter, GammaEdges with an S, and then here on YouTube, of course. If you like today's content, please smash that like button and follow us so the next time we post something, you'll get notified. So with that, I bid you farewell. Make it a great Monday and make it a great week. Remember your risk management. We'll talk to you later. Take care.